Howdy everybody, welcome back to Accounting 1101, and today we have an old friend coming back to visit. If you think back to our solid footing days, we learned about accounts receivable, and at that time you may have thought, I wonder if there are any other kinds of receivables out there. And if you had that thought, today is your day, because today we're going to learn about some of those other kinds of receivables that we have going on. So before we get to that, let's access a little bit of that prior knowledge, that you have in your brain there. What do you already know about a receivable? And so pause the video, maybe make a list real quick, scratch it out on paper. What do you already know about receivables? And I'm going to kind of pause here, and you can do the same, and then we'll come back and you can kind of compare your notes to what we have here. Okay, so hopefully you have your note, what you know about receivables, and in those notes somewhere, hopefully you mentioned that receivables are always on that balance sheet. They appear on the balance sheet, right? And we have a balance sheet here for Meta, aka Facebook. And you can see right there under the asset category and current assets, we have accounts receivable. So there we go. You hopefully knew where that was at on the balance sheet already. And hopefully you remembered, or maybe made a note, that accounts receivable occur when we sell to a customer and they pay later. They don't pay us right away. They're going to pay us later on. It's like an IOU from that customer. Then we look at Amazon's balance sheet right here. You can see they've got accounts receivable also under the current asset category right there. $24.5 billion in accounts receivable. Because if you'll notice, we're talking about millions here. And so that 24,542 has actually got 6 zeros behind it, which means 24 billion. Holy smokes. That's a lot of people owing Amazon money. What about Disney? They got account receivable? Yeah. And they've actually lopped off the account part. And so maybe that includes other things besides accounts receivable. And we're going to talk today about what those other things might be. The other thing we got to talk about with account receivable, what does it mean when it says net? You'll notice all the balance sheets we looked at there. It's got that mysterious other word there, net. And so in our chapter, we'll find out what that net is. But let's take a step back, revisit our solid footing days before we go forward. You remember, account receivable, we sell on credit, customer's going to pay later on. So when we make the sale, we'd have an entry that kind of looks like that. We debit account receivable, and we credit the revenue account. And then when we collect that account receivable, customer comes in and pays, we debit the cash account and we credit the account receivable account because it's going away. The customer's paid that debt. So hopefully in your notes, you maybe covered a little bit of that. Now we're going to look at the different types of receivables, and we're going to talk about uncollectible receivables later on in another video. So our goal right now, we're right here. What are the different types of receivables that are out there? So I always like to say, help you remember the idea of what a receivable is. We're going to key on that part right there. We expect to receive money that is owed to us. I compare it to a receiver in football. He's expecting to receive the football. We're expecting to receive money from somebody that owes us. Your book defines it as all money claims against another entity. Person, business, whatever the case might be. We have a money claim, meaning they owe us money. We expect to receive it. So anytime in accounting, when you see that word receivable, you need to be thinking, somebody owes us money, we expect to receive it. We know about accounts receivable. That was really the one we learned about in solid footing. We sell something on account, customer pays later on. No different. I taught you right the first time. You don't have to worry about that anymore. You know what it is. But we haven't really talked about notes receivable. A note receivable involves a formal promissory note. Account receivable isn't really formal. It's just kind of an informal credit you've extended, and the customer can pay in 30, maybe 60 days. No interest is involved. A note receivable, it's formal. We have a contract documented on a promissory note that says how much is borrowed, an interest rate that's going to be charged, and the exact date that it's all due. And normally our notes receivable are covering periods longer than 60 days. Okay? So account receivable, informal, no interest, a note receivable, that's big time. We're drawing it out. Everybody's signing it. It has the terms of the deal, an interest rate, when it's due, all that stuff. So that promissory note that I mentioned, that contract, it can take different forms, but the elements are all pretty much the same regardless of how it looks or the form it takes. And you can see right here we have a $2,000 promissory note. Face value, $2,000. You can see the payee, who it's paid to, who the maker is, people making the promise to pay, the borrowing the money, the issuance date, interest rate right there, and the due date. So it's a formal document, contract. All right. A couple of things here. If we're going to calculate the interest on a promissory note, we need a formula. Our formula to calculate simple interest is always interest equals principal times rate times time. P times R times T. And our book is always assuming time, our year would be 360 days, even though in the real world it's 365 obviously. And so your time is whatever days over 360. The maturity value is always going to be the principal on the note, in this case $2,000, plus the interest on the note. That's the maturity value. That's the value that has to be paid on the due date. Okay, so two things you need to know how to calculate here. Simple interest on a note, and then the maturity value, the principal plus the interest that you just calculated there. So let's give it a try here. We got a $2,000 face value promissory note charging 10% interest. Issuance date on March 16th, due June 19th. So we're talking 90 days right there. So simple interest. If you want to give it a try, pause the video, scratch it out, and then you can come back and check your work against mine. I'm going to go ahead and calculate it. So again, if you want to try it on your own, which I encourage you to do, pause it right now. Because we're going to go ahead and do a little math here. P times R times T. Principal is $2,000. Face value. The rate is 10%. And the time is going to be 90 over 360. Again, our book is always assuming a 360-day year. In the real world, we usually just assume 365. But to make the calculations a little bit simpler and make things come out even, our book uses 360. So we can just go ahead and multiply all that out. Got my handy calculator there. 90 divided by 360. 0.25, 25% of the year. I'm going to multiply that by 10%. I'm going to multiply that by 2,000. Ah, my calculator went away. There it is. 50. So the interest on that particular loan, on that promissory note, is going to be 50 bucks. So what about the maturity value? When that note gets paid back, how much is it going to have to be paid? How much is going to have to be paid? Well, maturity value is always the face amount plus the interest. So 2,050. If you did the math on that, hopefully it worked out correctly. If you didn't get that correct, then check your work, see where you went wrong. There's also another group of receivables that we can lump into a category called other. Other receivables are other monies we are owed aside from account receivable and notes receivable. That could include interest receivable, taxes receivable, and maybe even receivables from other employees. Like maybe we lent an employee money, they had a crisis to get them to payday. We gave them some money on a loan. They got to pay us back. And so that would be a receivable from employees. You can have other types of receivables. Remember that word receivable. Anytime we have a party who owes us money and we expect to get paid that money, we have a receivable. So next time, what are we dealing with next time? We're going to deal with uncollectible accounts. We're going to shed a little bit of light on what that net is behind account receivable on the balance sheet that we've seen. So join us next time for that, and we hope to see you there.